Hello everyone. I'm happy to welcome you to this YouTube channel, Invest Expert India. Here you will be able to understand various types of investment opportunities and which investment opportunity suits you and when to invest in which kind of investment and how to get maximum returns from your investments. Friends, in this video, in this presentation, today we will be talking about top 5 types of stock market charts. You must have seen that there are a lot of charts which you need to study and understand so that you will be able to take informed decisions as to when you should invest in a stock and when to come out of that stock. However, there are basically 5 types of stock market charts which are very popular, and there are a few more which are not that popular. Now let us try and understand what are those charts, what do they convey, and how to read those charts and how to take decisions on the basis of the information shown in the charts. So the 5 types of charts are basically, let us see, they are line charts, bar charts, candlestick chart, Heikin chart, and Renko chart. Line charts look like this. It is a simple line which shows the price at a particular time. That could be at a particular day of a month or at a particular time of a day. You can have the frequency, see here below, the N, D, etc. indicate the month of November 2020, December, January, February, March, April, and May. And on the right side, the price is indicated. So this line chart simply gives you a visualization of where the price of a security has traveled over a given period. All the data points that are used to develop this line are the closing prices. They are only the closing prices. They do not show open, high, and low price of the stock. Thus, this stock will give, this graph will give you a limited amount of information. So in order to have a better understanding, we can use the next kind of chart, which is known as a bar chart. Here again, every bar is having 4 data points. One is open, second one is high, third one is low, the fourth one is close. So in this chart, all the 4 data points are mentioned, and the midpoints of these data points is connected through a line graph. You should remember that on this vertical line, there is an indicator on the left side, which is always the open price, and on the right side indicator is close point. Okay. That is the closing rate. It is always like that only. Okay. However, to see this graph, it is a bit difficult to get a very clear understanding of the movement of the stock. Just to make it more clear, we can use the chart known as candlestick chart. It is looking like our bar chart only, which has got all 4 data points: open, close, high, and low. And here, if the closing price is higher than the open price, it is indicated in green color. The body of the candle is indicated in green color. And if the closing price is lower than the opening price, the body of the candle is indicated in red. Okay. So if you look at the graph, it will look like this. So every candle has almost all 4 data points. There could be some data point where something like this, where the opening is the same as high. Okay. And here is a data point where the opening is same as the low, more or less. Okay. Now, this will give you a clear understanding as to how the stock is moving and at what stage, that is after a particular kind of candle, at what type of candle the stock is taking a turn. Like if you see, this is a cluster where the stock has turned positive and it has grown like this. And this is a candle which indicated that the stock is going to go down. Okay, and it has happened like this. Okay, so how to identify these candles which change the direction of the stock? is something which we will be understanding in advanced courses. Okay, so the candlestick chart gives a better visual effect and visual understanding of how the stock is performing in a given time interval. Okay, the next chart which we are going to see is a Heikin-Ashi chart. The Heikin-Ashi chart is looking more or less like the candlestick chart. Okay, it is looking more or less like a candlestick chart. However, the opening and the closing or high or low are not same as the ones which is shown in the candlestick chart. There are a kind of formulae that are being used to indicate the high, low, open and close in Heikin-Ashi chart. See, a close is indicated as 1/4 of the total of open, high, low and close. Okay, all these 4 data points are added and divided by 4, that is the average price of the current bar is the close, and open of previous bar and close of previous bar divided by 2. Open of previous bar plus close of previous bar divided by 2, that is the midpoint of the previous bar. That is it could be yesterday's, or it could be 1 hour before, or it could be even 1 minute before. Okay, so whatever opening price is there, it is added with the closing price and divided by 2, and that is shown as open. Okay, and high is not the actual high, it is maximum of either high or open or closing prices. Okay, and low is the minimum of low, open and close. Okay, see how it is important for us to and why we should see Heikin-Ashi chart in comparison with the candlestick chart. The Heikin-Ashi chart gives a little more deeper sense of the change of direction. Okay, so every candle or a set of candles will not be present here and will not indicate the change of direction. So here it is continuously the range or the direction of the stock is made very clear, more clearer compared to candlestick chart. Okay, and finally we have the Renko chart, which is not a very regularly used one, but by looking at this chart you will be able to understand how the direction of that particular stock is clearly indicated by these data points, which are called bricks. Okay, each of these bricks will be formed depending on the on a certain formulae. Okay, and each brick is arranged exactly at 45 degrees to the other. Okay, so Renko charts are effective in identifying support and resistance levels, since there is a lot less noise than a candlestick chart. Which is a candlestick chart, if you remember, it is having a lot of candles, and a lot of every candle is giving some sense of indication. However, this Renko chart will take all those things into account and will tell us whether the stock is going to go up or down. Only important thing to remember is that each each brick is not formed on the basis of a particular time interval. It can be one brick which may take a few days to evolve, or a few minutes to evolve, depending on the time frame which we are using, and the direction is clearly indicated by that when the bricks are arranged at 45 degrees to each other. Okay, so this makes trends much easier to spot. Okay, so that is the importance of Renko chart. So these are some of the important charts that you need to understand. Going forward in our videos, we are going to talk about how to identify and actually how to get benefited out of the information provided by some of these charts. And if you want to know more about these charts, you can set up a free video consultation call by clicking on the link given in description below. And not only the information about the charts, but we will be able to guide you on your investments also. You can also visit our website akshayrevenues.com for more details. And please subscribe to this channel if you have not subscribed till now. Thanks for watching, and see you in the next video. Thank you.